Who among you keeps up with the lifestyle of a wealthy hedge fund manager? I'm sure you've heard of some significant individuals within the field, but today though, we'll get to know Steve Cohen, the renowned day trader and multi-billionaire hedge fund manager who has achieved great success in the stock market. Cohen has been hailed as one of history's most successful dealers, with a net worth estimated to be over $16 billion. We'll look into the tactics that he used to trade differently, as well as his remarkable market trading skills. You'll discover how Cohen built his fortune from scratch and hear about some of his most impressive trades in the market. Hi everyone, welcome back to the Life of Luxury. Savor the flavor of exploring wealth, where we post videos about life and luxury. Join us on an exciting video as we explore the wonderful lives of the elite. We are absolutely thrilled to share our knowledge with you. If you are new here, please subscribe and hit the notification bell so that we can continue to post videos on this channel. And don't forget to leave a comment and we'll make sure to engage and start some interesting discussions with you. Let's start out by talking a bit more about Steve Cohen. Steve Cohen is one of the most successful American traders of all time with a net worth of over $10 billion. He operates a hedge fund that achieved average yearly returns of 29% or more for more than 20 years. Now, this type of consistency year over year is amazing in the hedge fund sector and has led him to demand management fees of 3% and up to 50% of a net profit gain. His trading skills have been contentious over the years due to rumors of insider trading, which involves trading of a public business stock or other securities, such as stock options or bonds, based on material non-public knowledge about the company. His hedge company, SAC Capital Advisors, on the other hand, pleaded guilty to insider trading and agreed to pay more than $1.8 billion in fines in one of the largest criminal cases against the hedge fund in 2013. As part of the settlement, Steve Cohen was barred from managing outside money for 2 years, and the hedge fund agreed to plead guilty to wire fraud and 4 charges of securities fraud and to being close to outside investors. His hedge fund was eventually terminated in 2014, but he quickly created his own private hedge fund, Point72 Asset Management, to manage his personal funds. After his 2-year prohibition was lifted, he reopened the fund to outside investors with great success, and Steve Cohen was back in business. Now you might be wondering what Steve's trading style is. Well, he is mostly interested in short-term trading and is seeking for specific opportunities in stocks that would allow him to gain large positions with great profit potential. Unlike Warren Buffett, who considers a company's fundamentals before deciding to buy a stake in it and hold it for the long term, Steve prefers to focus on selecting undervalued or overvalued companies to trade. Think of Steve and his firm as a short-term speculator who seeks event-driven opportunities, such as company earnings and other catalyst events. Furthermore, he relies heavily on research from his team and prefers to have a flood of information flowing at him from all angles. This is his method of determining how the markets are moving and where to place his bets. His excellent team of over 100 portfolio managers, analysts, and traders is one of the reasons for his success. They all trade in a 20,000 square foot trading room that is normally chilled to 21 degrees to keep traders attentive. In short, Steve's primary trading technique is to gather data and hunt for major catalysts that could potentially impact individual stocks. Before we proceed, we suggest subscribing to our channel as we feature many profiles of these big names and their journey to success. Also, if you have any suggestions for future videos, Please leave them in the comment section. Now, back to the video. So what can we learn from Steve's trading style? The best way to approach Steve's type of trading strategy is to conduct extensive research on the operating and financial profiles of companies. This requires a solid understanding of the company's fundamentals, as well as knowledge of what is going on in the sectors that could lead to these types of events. Obviously, it is difficult to foretell or anticipate these events, but there will undoubtedly be early warning indications that will lead you to speculate on what may occur. Let us now take a portion of Steve's gains in this field. He took a short position in IBM in April 1999. Before the company reported profits, he saw potential triggers in the stock and predicted that the company would announce disappointing earnings because many computer and software companies were reporting lower than expected profitability owing to Y2K difficulties. So his team investigated why IBM customers were delaying the installation of new systems since the year 2000 was approaching. They conclude that they should remain with their current arrangements, so he went short on IBM shares around 84.50 cents. And when the earnings were out, they were actually quite good results, and the stock price surged. He cut his losses in after-hours trading following the announcement at 93.50 cents, a loss of $9 per share or $11. Fortunately, he sold the investment on the day of the announcement as the stock price continued to rise over the next few weeks. Now this is an example of his discipline in cutting his losers when the trade plan did not pan out according to the catalyst that he recognized. Actually, Steve Cohen observes a few trading rules. Here are some of his ground rules. Number 1. Steve believes strongly in trading psychology. He was one of the first hedge funds to employ an in-house psychiatrist to assist his traders in dealing with the stress of trading the markets. Number 2. Steve Cohen believes that you should know everything you need to know about anything. This indicates that when looking for possibilities in the market, one should not try to trade too many ideas, but rather focus on the greatest ideas and learn everything there is to know about them. Finally, at number 3, Steve looks for risk-taking traders. Whenever he employs traders, he asks them to tell him about some of the riskiest things they have ever done in their lives. He's searching for people who are not afraid to take risks and have the confidence to take on trades rather than just stand there and let their cars run them over. Now, what are your thoughts in today's video? Let us know in the comments! That's it for now. If you enjoyed the video and found it useful, remember to subscribe to The Life of Luxury for more videos to help you explore the wonderful lives of the elite. Make sure you hit the notification bell so that you won't miss out on any of our uploads. See you in our next video!